No one really knows how Brexit is going to pan out, and the political context changes day by day. But the assumption we made in our UK growth forecast is that there is a transition deal. Even under that scenario, though, we think UK growth will weaken in 2018 as the uncertainty increases over the future relationship, and that impacts UK investment. There should be some scope for a rebound in growth in 2019 if that happens, but there's a very real possibility of a much more dramatic cliff edge scenario where we fall out of the EU without any alternative arrangements in place. I think under that scenario we have to worry about the tariffs, we have to worry about the loss of access to the customs union and leaving the single market and all the rules and regulations and standards and codes and licenses that go with that. Definitely a significant downside risk for growth relative to our base case forecast in that scenario. It's quite hard to put Brexit into a global narrative. In many ways it was a very British affair. But I do think there are threats to the global trading system from the rhetoric we saw from Trump and from the US administration, which has persisted with this very significant focus on reducing bilateral trade deficits. As that focus pans out, we're going to see more and more individual firm level or industry level measures, I think, from the US. More pressure on the US trade partners to open up their markets more quickly than they would otherwise be willing to do. Now that may bring benefits in the long term, but in the short term could be disruptive. But probably none of that would be that much of a threat to global growth. What would be much more concerning would be a much more aggressive unilateralist approach from the US, complete withdrawal from NAFTA, threatening to withdraw from the WTO, which is something Trump talked about in his election campaign. That would increase the risk of retaliatory measures. And if we were to get into a global trade war, that would definitely have a significant downside impact on global growth.
By Q1 2018, when 7 scheduled rounds of talks will close, we should come closer to an answer to the question, will NAFTA survive? Our base case is that the US, Canada and Mexico will reach a revised NAFTA deal that preserves most of the features of the current deal while updating it and expanding it to new areas, including e-commerce and energy. However, there is certainly risk that the talks fail. The US administration is pushing hard to reduce trade deficits, including the deficit with Mexico. Some demands are particularly contentious: a replacement for the existing NAFTA dispute resolution mechanism, a US content requirement in NAFTA auto industry production, a Buy American provision for public procurement, and a 5-year sunset clause for the agreement. Politics is clearly as big a factor in the negotiations as economics. US corporates and exporters have lobbied the administration to keep the US in NAFTA. Canada and Mexico are unlikely to walk away from the agreement, but there are proposals they will find hard to accept, particularly in an election year in Mexico. Having promised to get a better deal for the US in NAFTA, President Trump is also eager for concrete results. The President's authority over trade is delegated by Congress, so it's uncertain whether Congress would need to ratify a withdrawal. However, just the announcement of a withdrawal would cause significant uncertainty.